Okay, welcome everybody to this evening's XAUUSD webinar. My name is Duncan Cooper. So that's webinar's live Forex market review. So let's get into that. Before we do, if you can read through the disclaimer, that would be great. If you're on our YouTube live stream, I cannot see the chat, but I've given you the link to join the webinar if you want to come in and talk to me. For those in the webinar, you can use the chat box or the Q&A box to talk to me. So I'll just give you a moment to read through the disclaimer before we move on along. All right, we'll move along now. If you don't know me, my name is Duncan Cooper. I'm the Senior Market Strategist and Trading Mentor here at XAUUSD Securities. Been trading the Forex market now for more than 15 years, mentoring for more than 10. If you want to contact me, my email is just there, duncan.cooper@acy.com. If you want to connect with me through the week, at our website, acy.com, go to the Market News tab, on our YouTube channel, at XAUUSD Securities Australia. And if you want to connect with me personally with my social media, head over to my Linktree page. You'll get my links there. There's also some analysis there and some free training. So if you want to have a look at that, just head over to there. If you want to get access to the chartlets and templates I'm using in MT4, then contact Nathan Bray's details are there at the bottom, but I'll put it in the chat for you. He'll only be too happy to set you up with my charts. Hello, Azu. How are you? There we go. That's in the chat. All right. Let's get into the news for the day and the rest of the week. So we're into Thursday, time zone my time, Queensland time, New South Wales time. So we do have some volatile news items coming out later in the day. 10:15, we have the Eurozone main refinancing rate, interest rate decision. An expectation of an interest rate cut. We did, I believe, have an interest rate cut yesterday from Canada. Monetary policy statement for the Eurozone. Press conference at 10:45. For the US at 10:30, we have the unemployment claim. So between 10:15 and I would say 11:15, good hour there will be volatile. So be very much aware what's going on there. Maybe you want to wait until after those events before you take a trade. Into Friday, we have tomorrow evening, Canada and US unemployment data, US non-farm employment change. All right, so it's going to be volatile for sure there at 10:30 p.m. as well. So some of these items, you may just want to wait for the item to come out and then decide what you want to do, unless you're in a long-term position and you're kind of risk-free on the trade. All right, so getting to the charts. First up, we'll have a look at the US dollar index. This is the daily. This range here that I've drawn in is actually, this is a monthly swing low, monthly swing high here. We're at the 62% level. This area here is a weekly area of support. And you can see that we are 2 positive days here. We've tried to come down again today and got some support in this little zone here. So it's definitely an area of support. So are we seeing a 62% pullback? If I just show you on the monthly chart here, there's a low here up to a high. Minor bottom here, but it is a higher bottom to this bottom. And are we pulling back to the 62 to maybe further move up? So if this is a strong area of support, pairs to the US dollar potentially going to go down, and most definitely the pairs to the US dollar are at the top of their ranges at resistance. So we could be having a topping out process and a bottoming out process here on the US dollar. Now, it's not out of the woods yet. We most definitely could see this US dollar index, come down, further come down, and then reject. Come down, reject, and then, head up this way or break through here. So it's not a given yet that we're holding here, but It's well worth watching to see what's happening here day by day. If we're seeing support keep coming in, that's probably telling us that maybe we are putting in the bottom here. And of course, if we see a clear break below there, then pairs to the US dollar are going to move higher. So just having an understanding what's going on there. And the S&P 500 though, for sure, has, I believe, moved to a fresh high. So nothing stopping the bull market at the moment on the stock indices. But I don't know if I want to buy at the top of the move. I'd watch it here on the day chart at the moment for the next dip. Watch the daily range for a pullback to the 62.79% zone. This keeps just moving up, keep dragging the fib up and wait for a dip. It's probably not best practice just to buy the actual highest point of the stock market. So it's going to be much more in your favor to buy a dip. So watching for a dip if you want to trade the indices, like we can see back here, we have a move up there and then it pulls back. So in this area is the way you want to trade. So, look for a dip and then look to get in for the next upward move. All right, so you need to wait for that to occur. Just try and get my charts to behave. Okay, let's get into the euro dollar now. So the daily chart. So on Tuesday, I was discussing this 108.84 to 108.94 resistance area. We did move, just count the days back. Monday, we went above. Tuesday, we reversed. Yesterday, we're down. Today, we've been trading back into that area now. This is obviously going to be the focal area today after the interest rate decision from the Eurozone. Nobody knows what's going to happen when price reacts from the data. We could shoot straight up through here. We could shoot straight down. We could mull around. So it's worth understanding where we're holding at. All right. For me at the moment, the bias is still, this has been a significant range down. We're coming back up within this range. There's a 79% level here of that range. Are we, potentially topping out at a 79% level? So I would favor maybe price could spike up and then start to want to trade back down after the news, and then that might give you an opportunity to get short at the top of that range rally. Of course, anything can happen, so I'll be standing aside until afterwards and then see how the market reacts. We could see a very, we're only 80 pips away from this high up here, or 100 pips away. We can certainly get up to 109.80 today, or up to 110. That would be, a heavy selling level potentially as well. We could come down. We're getting support down here at 108.04. So the 10800 level, we could come down here today. That's only 80 pips away. So I could get down there in a heartbeat after the news and then want to hold here to move back up. So you want to see where we've been failing at. And then after the news, where do we hit? And then do you start to see price reversing up or down? Okay. It's been rather range bound over the last, I would say 3 weeks here, 3 to 4 weeks. We're trading between 108 and 109. So, we might not break out of that range. We may still stay within that range after the news. We'll have to wait and see. But if we get a very good reaction down, we may well be seeing a longer term move back down this range. Cut in interest rates, and if there's more suggestion that, okay, cut next month, so on and so on, because we're just cutting now, that's potentially could favor a much more weaker euro US dollar. So we'll just have to wait and see what comes. Okay. Euro yen. Now it's failing where I said it was going to fail on Tuesday. When we were down here, I said watch for this to come back up to the 2008 monthly high. This line here, this is my 15-minute chart, but this is the 2008 monthly high at 169.95. I said watch 169.95 to 170. Where we've been holding against today. So if you go to the monthly charts, squash it in, here's that monthly high here from back in 2008. So it's a significant historical high where we're holding at. We could, and interest rates, if they're getting cut, it's going to lessen the carry trade. Traders may now start to think that the carry trade is coming to an end. Could be shuffling their positions. So dangerous on the euro pairs at the moment, just jump in right now. And of course, waiting for the news event to come out could mean that you miss the opportunity to get short or long, depending on what your focus is. But all right, so at the moment, all trends are up on the monthly, weekly, day charts here. And as we break it into the 4-hour chart, we have been seeing a shift in trend intra-week to down, then to slightly sideways here. In actual fact, back to the daily, what's happening here is we move to a lower bottom, and then we're having an inside day and a day up. So we're actually having a swing down and then a swing up. Is that swing up going to hold at that monthly high point at 169.95 to put in a lower top to move maybe downwards towards 167.32 support? Now, of course, we could come up today after the news event. That's the major high we had, an intervention from there, which we haven't been able to get to. So we could most definitely come up to 170.79 today and one small hold. We've held there twice and then sold down. We could simply just drop from this level. So if we get a spike up, certainly watch 170.79. We could even get up to 171.55 today, depending on how the market reacts. So you want to get the levels drawn in, so you know where they are. So then when price gets to one of the levels that we could be watching, what do you want to do when price gets there? All right. Forgetting the news, I would just be anticipating at the moment that maybe we're going to be holding where we're at to form this kind of price action down. But a little bit dangerous at the moment just to take a position. If you put a fib from high to low there, you'll see that we're in the 62 to 79% area. We're false breaking yesterday's high here. And, putting the news aside, we're most definitely, there's a bit of a trend line through here, which is a bit hard to draw, but we're getting a bit of a turn down. This has just come back up in this candle to retag 69.95 and sold back down. So selling pressure is located at 169.95 to 170 at the moment. So depending on your viewpoint, you could be selling now and wanting to hold through the news event with anticipation that we're going to move down, but that's your decision. Are we ultimately failing here? Are we failing on the euro dollar as well, wanting to move down? Okay, euro pound to the daily. Difficult to trade this, of course, with the interest rate decision as well. This potentially could drop south if the euro weakens. At the moment, we're most definitely sitting on support. Monthly support here, 84.92, and then lots of weekly lows. These are all weekly lows, but that's the monthly low, 84.92. So holding support at the moment. Difficult, this one. It's very sideways here. I'd look at another pair at the moment. As I was saying on Tuesday, I'd be much happier for this to just come back up the range to a higher level where you could be looking to sell in line with the dominant trends. At the moment, we're clearly on support, and this selling so close to support is not the best option. So I would just be waiting for some nicer price action there. Maybe, in a week's time, this might be up here somewhere, or, over the next couple of days, we break below 84.92 clearly, and then you can start to look at price action after that. Pound dollar to the daily, still holding its uptrend here, but it's getting very heavy going. It's only traded over the last 2 days, something like between 127.60-ish level up to 128.00, about a 40-50 pip range. All right. So, is it topping out here or is it going to continue? As I've been discussing, there's all this resistance to the left, this high to the left. We're just fractionally above the 79% retracement level at the moment. Clearly, this high of the last week, 12800, is holding the market. We've 3 days, including today, we've traded above that level. Did close above it Monday, Tuesday back below. Today, we're not holding it. So 12800 is clearly where the sellers are defending. And at the moment, 127.61 here over the last 2 days is where the buyers are defending. So there's an ongoing battle here between this tight range. Which way are we going? I don't know. I'm inclined to think we're at the top because of just the position of the market at the 79% area. Of course, with the US job figures coming out tomorrow, that's going to dictate ultimately where this goes. At the moment, as we can quite clearly see that 12800 is the failure point, the holding point, that's the sell side of the market at the moment. So that's the closest area that we're at. So logically then you can see through into London here, we came up. Early London, we came up to 128, just simply held there. So that's just proving the point. Okay, and it's also last month's high. So once more, if we get a visit back up to 128, that would be the area to watch. To trade down to 126.61, and can we break? We can't break 127.61. That's your area of support to look for trade back up. You can see support clearly came in here yesterday. All right, now you could be drawing a fib on this 50-minute range. It's been forming through the day. 79% levels up there at 128.01. So that would be an area to clearly watch later in the day when the US news comes out. Do we once more get another test up there, 128, 128.01? And do we start to fail up there? And then do we see, are we going to see a push up here, hold to come back down to 127.61? And this will either hold or break. All right. Excuse me just a moment. Okay. Pound yen, daily chart. This is breaking into a downtrend on the day chart at the moment. It's starting to map out for you. I am just pausing because somebody's, are you saying you want me to look at the German 40? Is that what you're saying? Here on the pound yen, this is up to a lower top, lower bottom. We're having a day up today, so that's swung up. And, are we going to put in another lower top to come down this range? There's a potential here for a double top, as I've been discussing. And the target for that, if we break the midpoint, would be down here at 182.21. So lots of time is going to need to unfold if we're going to get down there. But this is in a downtrend on the daily after the intervention high here. So the most immediate trend is down, even though we're rallying it the last 2 days. So with that in mind, let's get rid of that fib, put in the most immediate range in here. The 4-hour chart, you can see we've hit the 79% level today. So that looks like the rally point. We've almost come up to fill the imbalance. This could get a little bit higher and fill this imbalance just in here that we haven't quite got yet. But logically, the 79% level would be a good area to, if we can get another test of that level, if you're not already short at 199.90, it could come up to could come up to the 200 level. and stop above the final highs here. And then you're looking for this to turn down, to run back down. Okay. So have a look at the 15 minutes, just starting to break a little bit down. It's just starting to break. There's a little bottom here, or a little bottom here. This has now come down to test that level. All right, so a little minor area of support's broken there to get retested. So it looks like it's maybe already failed at the 79% level. So you need to decide what you want to do there. Are you going to wait to see if it can get a stab back up at the 200 level, or is this already starting to move down? You need to make a decision one way or the other. All right, let's get into now the Aussie yen. All right, like the other yen pairs, this is putting in a lower top, lower bottom. I need to map it out for you. It's down, rally, down. We haven't had a day up today, but come up to that point. If we're mapping out the intraday moves, we're at that point there, and then are we maybe coming down? I said to you on Tuesday, because this 102.82 level is the monthly high from back in time. I said watch that for support, even though we've been starting to map a downtrend here. This high over here, we bounced off that on Tuesday. Was a good opportunity if you wanted to trade back up from that level. All right, to the 4-hour chart. The daily high is here, so we'll use that range there to the low. You can see we're holding at 62 level, and I'm pretty much holding right at 104. So are we going to head down now? There's still a bit of an imbalance in here. I always like the 79% levels, and there's an imbalance in here still not filled. So personally, I would much prefer to see this come up to 104.26 first and come in and spike into it and fill this imbalance here. But price doesn't have to do what I would like it to do. So I would be a lot happier up here at 104.26 to see price get there first. However, you can see over the last 2 trading days, once we get above the 62 level and hit the figure, 62 level, couldn't quite get the figure today. Quite clear the sellers are there at the moment. As to whether price action is going to see any volatility to drive it up to 104.26. If you're waiting for that level, that's fine, but you might miss out. I much prefer the 79 level, so I will be quite happy to miss out rather than getting short here at the 62 area and then have to weather price going against me. So, but later in the day, if this was to come up and try to get above 104 and fail, then I might have to decide, okay, it's time to look for an entry. All right, so at the moment, we're struggling at the 62 level, just underneath 104. We are seeing, trend line break. So we are moving down on the 15-minute at the moment. But you could be waiting for maybe a reversal day today and then look tomorrow to get short, okay? Would you be just getting short, obviously, at a lower price point somewhere on a setup? But it does look like we haven't had a day up yet today. This is a day chart, so we might just need to have a day up so we can actually have a perfect swing up from this low up and then put in a lower top to trade down. So we'll have to wait and see whether that can just get a little bit higher up there. Aussie dollar did trade up earlier in the day. Let's take this to the daily chart first of all. Day chart, very consolidatory. I was saying earlier, I do put out some analysis, and if you go to my Linktree page, you'll get it there. And I did say on Monday that this was in a range. And to look up, Look up here, and we have been holding here all week. All right, so are we holding up at the 66.80 level? Might need to change the number on that. Just bear with me. Just want to double check it. I thought it was slightly below 66.80. All right, 66.80. Oh, there, 66.79. 1 pip. I thought it was in the 70s. Here we go. Splitting hairs there, but all right, so we're failing at 66.79. Of the range that I've been discussing, this late December high to the current year's low, 62% level overlaps with that level as well. So, I'm thinking, are we topping out here to come back down this range? Day trend, though, if you want to be perfect to the trend, that is a higher top. This is a minor higher bottom here, but you can see it doesn't like it up here. It's rejecting. So really wanting to get short earlier in the day, you needed to be watching up here, being aware that this has been a failure point previously. Previous resistance here, more resistance. Okay, we failed here earlier and just came up to that level, and there was a 79% level there as well. So the news might drive price back up there or not. We'll have to wait and see. At the moment, it's trading back down to some form of support at 66.44. Back to the daily. It's coming back into this area here, and it could hold there, move straight back up, and it's just trading in about a 40 pip range. All right. Some of these ranges on the pairs at the moment are quite narrow this week. So if you're more bullish this pair, then, we are on support here at the moment. And whilst we failed at this 79% level of this range, we're probably at a 62% pullback of this range. So depending on what your bias is will depend on which way you draw your fib. See, there's a 62% level here. We could be holding here to move up. So what is your bias? All right. Sometimes the bias can be difficult when the market's just reacting to news items at the moment as well. I much prefer the bias of this range here and price holding at the 62% level. So that puts my bias to the downside, but of course I could be wrong. Maybe the bias is to the upside. All right, so you need to make a decision yourselves which way you think the bias is. I just think that there's a definite range here. And as we're failing at the top of the range, I would say at least we're moving back down to here. Then we could move back up and just stay range bound if it wants to be. Okay, so it's rather range bound. We have failed at the top of the range, so I would say maybe we're moving down. But of course, as I've just shown you, there's an even smaller range in here between these 2 points as well. So some of these pairs aren't easy at the moment. You need to clearly define where price keeps failing out on the buy and sell side and trade as close as you can to those areas. All right, so to the upside, if we're trading to the upside, then we are at that 62 level and on support. So you could be waiting for some form of trend line break to the upside. If your bias is to the upside, what's your trigger to get long? We're just slightly below the central pivot point at the moment. I think we may have failed up here, and this may be the high of the day, and we're trading down today, but we'll have to wait and see. All right, let's get into the New Zealand crosses. The New Zealand dollar, we'll get into that in a moment. It's sold down from a previous double top. So the Aussie sold down at exactly the same time as the New Zealand dollar sold down, and the New Zealand dollar was putting in a double top. Or it traded back to a double top area. Don't know if it's putting in a major double top at the moment, but it definitely failed at a previous double top. So that's why I'm taking the bias more to the downside, because of a correlated pair failing at a significant level too. All right, let's get into New Zealand yen. Now, on Tuesday, I said watch for support to maybe be support here, this high here, and it was. The bigger ranges, as I've been saying, the bigger move has been up, pull back to 79, up to the 127 extension. This is a range bound in the profit taking area. So I'd be more inclined to look for a short up here to trade back down to here. And can this break for a retracement back down the range? Because this is overextended at 127 extension at the moment. Now, yes, it can go higher because it's been in a very strong trend, but most of the yen pairs are starting to break down into lower tops and bottoms. This is higher top, lower bottom, so it's a little bit mixed. It might be coming up to just put in a lower top. Who knows? Move it to the 4-hour chart. You could be watching to see how price pans around this 79% level. We get a 4-hour candle closing below the 79% level and below this little area of support here at 96.42. That would probably be suggestive of, yes, we're moving back down to at least to the bottom of the range. Now, this may just stay range bound for a good week if it wants to. So all you can do is trade it from the top, trade it down to the bottom, and trade it back up. All right. So it's come up to fill the imbalance that it formed the other day. The imbalance in this candle here has been filled. It's not wanting to break above at the moment. Even though the New Zealand dollar was moving up early Asia, this really wasn't, because I think the dollar yen was moving down. So it couldn't go anywhere. But if the New Zealand dollar, as we get to it in a moment, is maybe going to have a sell-off from its previous double top, that would potentially drag this down. All right. So the New Zealand dollar has traded up to this previous double top in February. If this is how we finish today, that's looking like quite a nice reversal signal. So just from a day chart perspective, if we were closing right now, simply breaking the low of that candle, just putting your stop above, a little bit above the highs, that could be the trade. To see if we can trade down to support at the moment, and then can we break support to create a double top pattern? Right, of course, today hasn't finished yet, but if that's how we finish by the end of the day, then that could be a trade setup for you. 4-hour chart at the moment is still in an uptrend here. So even though we've sold off from the highs at the moment, we could still, if we can't break the trend on the 4-hour chart, 4-hour chart trend here is still up. We pull back to the 79% level. So we could actually, depending on your viewpoint, if you're much more bullish and you think we're going to break above those highs, then you could be looking at this 79% level, stop just below the low here. So the 79 level is at 61.78. And, trying to get long for a potential break higher. So, the trend is up there at the moment on the 4-hour. If we break the low, then you could still be patient. I don't like getting long here, trading into highs where we've already failed at, because that's already telling me we failed once. So why do I want to trade a pullback from a failure point? I would much prefer to wait for price to break the trend on the 4-hour and then come up for a rally, and then look at this area for a turnover and look for an opportunity to get in here. All right, we don't have that at the moment, but that's what I would much prefer to wait for. Or wait for a further go at 62.17, the double top high. And if it fails there, you could drop down to a 15-minute chart and look for a tight entry. Today on the 15-minute chart, there was a nice signal candle here. And, just trading the break of that signal candle, that red one here, just putting your stop above, limited risk. So if we were to come back up again and test 62.17, you could look for a reversal on the 15-minute chart again to get short. Now, we might not go up for a retest. Sometimes when we come up to a significant level, we just sell off, and it doesn't want to rally. So maybe the only option you have to get in is trading the break of tomorrow's low if we have a rejection candle. So we'll just have to see what happens. Right, so you do have the option of waiting, waiting for a break of this 4-hour low down here and looking for a rally. You could actually draw a fib from this high to low and look for a rally up here. Look to that 79% level, 62.06. If price rallies. All right. Hopefully somebody got short up there. It was a very significant price point. This is, if you didn't, this is a good learning example of when you've got a clear resistance level where we had a major failure before, with a pattern of a double top. If we get anywhere close to that, we'll often then run out of buyers and then we'll trade back down. So whether or not that is a final point or not, it doesn't really matter. If you start to understand what happens at these levels, the next time you see it and then it sells off, even if it's just an intraday trade, often we'll get selling pressure there at that level. So you can get the risk out of the trade. And sometimes, yes, it could unfold to be a massive trade. And other times it may just be an intraday trade. Ultimately, this is still an uptrend until it starts to prove that it's not. But it is at a clear area where we could start to form, that was a double top. We could form a triple top here to trade all the way back down to support. All right, dollar Canadian. I didn't get anywhere near support where I was discussing on Tuesday, and it's been then got driven all the way up to the area that I said watch for the target. So with interest rate cuts, you would have to assume that that puts the dollar Canadian in a much more bullish position at the moment, with the US not yet cutting its rates, especially if the dollar Canadian is going to have, I don't really follow the Canadian, so I know they cut the interest rates. I don't know what the commentary was, so I don't know whether they're really emphasizing there's more rates to come. But if you have a closer look at what got said yesterday, you'll start to get maybe a fundamental picture of maybe this can go higher if we're certainly wanting to see more cuts coming in. At the moment, though, it is very range bound indeed. You can see here on the daily. And with that in mind, I would still have the premise of looking at this as a range. 137.34. That's where I said to take profit the other day if you got into a long. 137.34. And so if that's the top of the range, that's the bottom of the range, you want to be trading from the top down or from the bottom up. And when we're at neither one of those levels at the moment. What might be happening in the middle of the range is an area of support here. So maybe we can't get back down to the bottom of the range now. I would certainly, watch. You can see we rejected there over the last 8 hours or so. So a revisit at 136.68, we see that hold intraday on a 15-minute chart, then potentially that's your buy area to trade back up to here. All right. That's where we've been holding all week. So watch that area. If that area breaks, of course, then the lower area is the area of support to watch. You can see we failed up here 3 times, so quite clearly here, this is your profit target still. All right. Dollar franc. Weekly chart here. This range, this is actually a monthly top. Let's go to the monthly chart. Monthly top to monthly bottom. This is putting in potentially maybe a double top. Certainly two negative months from coming up, and the weekly trend has turned to down. All right. So it's just bouncing on weekly support here. So this is definitely support. It's filling this imbalance that was here. So I would be anticipating if this, If this once more tests 88.92 and holds, so 89 level, then I would anticipate, even though it's counter trend at the moment, it's going to come back up to 89.91 area, old support. For our chart, looks like it's maybe putting in a higher bottom here. All right. When the US news comes out today, this was to spike back down into this zone, the 79% level and support at the moment. That could offer you a level of support to trade from, to trade back up. That's assuming that we can get a spike down into the air, because it's already forming maybe a higher bottom here to come back up to 89.91. Okay. But in the short term, this is quite overextended. And as well, if we just assess price action, what's been happening on the 4-hour chart, there's a number of imbalances here that haven't been filled. So we've been having some heavy selling off on this particular pair. So this imbalance just here where I'm saying price could come back up to support, that could hold the market then to move back down. But there's a number of imbalances here. So if you can get a very tight entry down here, 88.92, and then watch to see if this imbalance gets filled and this imbalance gets filled, back up to the strong resistance area at the top. All right, that's what I'll be looking for there at the moment on the dollar franc. Dollar yen, from the weekly perspective, it is maybe starting to put in a lower top. So trend gets mixed here because we have a higher bottom, lower top. So it's a little bit suggestive of a topping out phase, but we could come down here and put in a higher bottom and then it heads back up. It's all going to be around about what the US dollar news comes out. That will predominantly affect how this reacts. But there's a little bit of a suggestion there of a lower top on the weekly, which is happening at the 62% level of this sell-off, or fractionally above here. Might change my resistance level to 157. 157.187. This little area there. So this is maybe coming up to put in a lower top, or it could be putting in a higher bottom to this bottom and continuing up. It's a little bit, trends are a little bit mixed, but have we topped out there up here? So, could be monitoring this fib range for a rally at the moment. All the other yen pairs are looking more negative. So this is a little bit mixed. 79% level. That's why I redrew my line, because of this little area here. 79% level is at 157.02, and then you have this high point here at 157.18. So that would be an area that I would watch for the short side. I don't really like where price is to go into. I don't really have a reason to buy, but that would be my short side. As I was saying in last night's webinar about last month's range is here, is the 79% level of the range. We've started to move below it. And this price action coming up here early or late May. This is early April. We haven't been able to take out the high of May. This isn't early April, this is early June, sorry. So there's May's high to low. This is June's high here. We haven't been able to come up to try and attack May's high, so maybe this is the high of the month and we are heading down. But I would like to see, try and get in on a high rally if it could. Price holding within the high to low range of last month for maybe another month down this month. We'll have to wait and see. So just monitoring to see if it can come up to a very good area of resistance, which is up there at the 79% level, 157.02 up to 157.18. All right, getting into gold. This is where I was looking. suggesting on Tuesday, where strong support was, came straight down into it, and it's up at the 127 extension of that range here. So now you should anticipate this is going to pull back to maybe do something like that. So just have a look at the daily. Daily's just popped up to a higher top. So now you want this to pull back to put in a higher bottom. We could see a left shoulder head, right shoulder form here, which on the 4-hour chart, that's the day chart, left shoulder, head, so will it come back into that area? So we're looking at 23.27 down to 23.24 for the right shoulder. Okay. Now, Azu, you want me to look at German 40. Got the German 30. The German 30 do? Don't have a German 40. All right, so look through the time frames. Monthly's up, weekly's up. Well, we just moved to a higher top here, so logically, I would want to see a pullback, draw a fib, look for a pullback to the 62.79% level, keep dragging the fib up if price keeps moving up, look for a pullback. All trends are up, so trends just turn back to up there. So you want to look to see if price can have a dip, look to buy the dip. Then you want me to look at silver. Is that a good resistance area? 30.095. So at the moment it's holding on top of weekly and monthly support, or old monthly weekly resistance. I'd be much happier just from a weekly perspective. If I was trading this, I would be much happier that this weekly outward move. I'd be a lot happier. If I don't know what you're trying to do, but if you're looking for the opportunity to get long, I'd be a lot happier for this to have a 62 to 79% pullback now on the weekly scale before looking to get long. And the day chart is down. So whilst it is holding above those resistance levels just, I would potentially suggest this might be, down, rally, into the 627 Amazon area, and then potentially in this area looking then for a turnaround to trade up. So high time frame trends are up, but the day is down. So I don't know what you're trying to. Are you looking for a short? Looking for a long? You're looking to short at 27.50, or you're short, or you're already short. You're targeting 27.50. So you're targeting 27.50. So you're targeting down here. All right. Well, I mean, the data trend is down. It is getting support from those old highs. So it is in a little bit of a difficult area to be short just right now because it is holding above the highs. So, I don't know where you're short from, but I'd be a lot happier seeing this come up, having a rally, and then shorting up here. All right, hopefully that helps. You need to see, you quite clearly need to see price action. If price action isn't getting back below these levels of these highs, you're wrong if you're short. All right, hopefully that helps. I'm going to wrap it up there. If there's no more questions coming in, I think I've got all your questions, Azu. You put quite a lot of comments in there. All right, so you're bullish pound dollar New Zealand for next week. Well, we'll have to wait and see what the US news brings on Friday, I suppose. But pound dollar is going very slow at the moment. So is that just a pause before we break above, or is it signaling that we're going short? I don't know. I'm on my hands until we get past some of these news events, but I'll wait and see. All right, so be very much aware tonight we've got the Eurozone interest rate decision coming out. It's going to be very risky taking a position on a euro pair ahead of that. Coming up next week, if you want to head over to the webinar page, links up there. If you want to join me next week, I have analysis on Tuesday, 7 p.m. Sydney time, education webinar on trading using the monthly and weekly candlesticks, looking at the highs and lows of those levels as good levels of strong support and resistance. And then on Thursday, more analysis at 7 p.m. So my webinars next week will be at 7 p.m. If you want to join me, just head over to the webinar page here, link at the top. And I look forward to seeing you then. Other than that, of course, we've got volatile news coming out today and tomorrow. So there's nothing wrong with not being in the market until we get past those news items. Don't have the fear of missing out. I'd rather miss out and not lose money and be patient and just, I've found over many years of trading, if I'm just patient and wait, something's going to come around the corner in the next day or two that I'm going to like, rather than scolding myself because I had this fear of missing out and wanted to get in a trade before the news came out because I thought it was going to go one way or the other. All right, so patience is the game. A trade will definitely be setting up over the next couple of days following the news items that you can avail yourself with. Okay. All right. With that in mind, have a great rest of the week and look forward to seeing you next time. Thanks, everybody.